So let's put on the crystal ball. Let's take out the crystal ball here and put you on the spot and give you difficult questions that are unanswerable, but we'll make you answer them anyways.
Okay.
What's the market going to do in Sacramento? What are we looking at in 1 year, 3 years, and 5 years?
Well, like I tend to say, I'll tell you in 1, 3, and 5 years what the market did.
Great answer.
So that's always the question. People look and say, what is the market going to do? And it's kind of like, what if I turned the table and said, what's going to be in style? What's going to be fashionable in 5 years? What video games are going to be popular? What's the suicide rate going to be like in the United States? What's the unemployment rate going to be? I mean, we could use so many different factors, but, it's a prediction. And for somehow, I think in real estate, we think that it's just so much easier to predict the market for whatever reason, but we have to realize that the future hasn't happened yet. And so, but what I will say is that markets tend to behave in cycles, and we've had a 7-year run of price increases. And at some point, it would be reasonable and normal to expect for the market to enter a different phase where, values soften or decline. That doesn't necessarily mean it would be 2005 through 2007 again, but markets tend to behave in this cyclical manner. And so what would be more surprising is to see values continue to rise at the rate that they've been increasing. And in fact, I mean, the market lately has been a little bit more flat, and it's still really competitive and aggressive out there. But in terms of price growth, it's been pretty modest lately. And I think that just shows that, the market is slowing compared to, it was on major steroids in 2012, 2013. It's just not the same as it was. But, so it's impossible to say with certainty, but I mean, I wouldn't be surprised to see the market do a different thing at some point. And it really is a guess, though, with, say, the market did turn, how much would it turn? That's what no one knows. No one knows the exact time or by how much, and there's no sort of bubble formula or, that every time a market turns, it would be this utter collapse, because what we had in 2005 through 7, we had a total collapse of a market that was utterly built on fraud. And so we don't have that sort of dynamic in today's market. We don't have the ticking time bomb of adjustable rate mortgages, but we do have a market that's built on historically low rates for 7 years. I mean, we do have some unhealthy elements for sure. And I think people are struggling more with affordability, but what will happen in the future? Norm, I will tell you in the future.
That's good answer, good advice. And I think you hit on something that people hear, that the market is declining, slowing, tightening, entering the next cycle, and they start freaking out, or the panic or the fear comes into it. But that's normal. We're not talking, slowing means the home value appreciation rate is slowing, not that it's going 20% negative overnight. So, if we went from, 8%, whatever, 6%, appreciation, I don't know what it's been, to all of a sudden 3 or 4% or 0% for a year or two, that's actually very healthy for the market, and it keeps it balanced. It keeps it from overheating. So, just touch on that maybe, just to put people's minds at ease.
Absolutely. So, I'm definitely not a big doom and gloom guy. I'm a big fan of whatever the market's doing. I'm going to speak the truth, and whether that's something that people want to hear or not. But I think the truth is, it is kind of what you said for right now, where the market is still showing some forward progress, but it's like Barry Habib's analogy that I love so much. The market was going 80 miles per hour, but now it feels like it's going more like 20 or 30. Mm-hmm. And so what will it do in the future? I mean, that's just a guess, but I always remind people that most of the time in real estate, people don't buy based on where prices are at, or where we're at in a market cycle. They tend to buy based on affordability and their lifestyle. And so if they can afford a house and it's time to move, it's time to buy, then they're going to buy, right? And so I constantly ask people, when I see that they bought in 2012 at the bottom of the market, I say, did you know it was the bottom of the market? And you know what they say almost 100% of the time? No. And so it just reminds us that even though we like to think that we're these experts in timing the market and that it's all about timing, I've got to buy at the right time, practically speaking, it very rarely actually happens, right? And so I think in some senses that brings comfort to people, because you got to think like, well, yeah, I mean, you kind of buy when you buy, but you better be comfortable with the payment and the neighborhood if you do have to ride down the market eventually. So that's been my advice. I've had that conversation so many times over the past 3 or 4 years.
And that's something that, anyone in real estate, or realtors especially, as they're talking to clients about buying, selling, dispensing solid information, they should really follow that advice, listen to what you say, and definitely go on your website. Yeah, that's fantastic.